Hi everyone, and welcome to another diary. Last time I told you how I built this thing based on the data from the reports, and today I'm gonna tell you all about this top part. What is this part? Well, in order to do an analysis, you usually need some inputs, and based on that you calculate some outputs, same as in many of my previous spreadsheets. So the inputs are here, they are parsed, they are quite clear, and I have selected only that which I need at this point. And based on these inputs, such as coin, leverage, side, price delta, ROE, total USDT, profit, loss, etc., I'm building this. It will be my outputs, and most important of them are the ROE, the P&L, the different stats for the number of trades, for example, but I'll just walk you through them one by one, hopefully in a rather logical sequence. So basically what is here on top is the overall data, or the averages, or the sums of things, depending on what this is. And they change based on what I filter here. So if I were to select, instead of only real transactions, I were to select all of them, all of the numbers here would change. So this is not a static field. These are all dynamic based on the selections made here. And this way I will be able to cut this data in many different ways, trying to figure out some patterns or some exceptions, and basically try to get some insights into what I have here. So we'll start with the totals here. We have the total P&L, which is the sum of everything here, and the ROE terminal total. Now, let's stop working with emulation, or at least a mix of emulation and real trades. Let's look at the real trades for that matter. In the real trades, see the P&L is exactly as expected since I haven't had any new trades. In the terminal, that's what I have, minus 17 cents. But for ROE, that's quite a weird number. You see the P&L is negative, but ROE here, which is the total of this, is for some reason positive. If we go back to the terminal, here this number is is minus 0.471, and it's negative, as you would expect. But here it is positive. And I tried to figure out what's happening here, and I ended up thinking that it is because of rounding. There are just so many transactions here, 370 to be exact, and all of them are with very large degree of accuracy. I have here only the 3 decimal digits displayed, but in reality we have many more digits. You see, it's almost endless. It's almost endless. This is just for viewing, and here it only shows you the data with 3 digits accuracy. So maybe these differences add up, and in the end you get a skewed number. I try to check, for example, well, if you go on level of 1 trade specifically, let's check out this one as an example. We go here, this is the 1, and the ROE is 0.253. In my spreadsheet, it's 253, same thing. But if I were to select, let's say 5 of them, 1, 2, 3, 4, 5, at the bottom we get minus 2,542. All right, here 1, 2, 3, 4, 5, we get minus 2.567. We already have 5 trades, and the difference is already noticeable. Imagine what would happen if you have 360. Well, you don't have to imagine, this is what we have right here. I'm not too worried about this. It's an alright ballpark number, and let's say I wanted to view only the losses, and now it makes sense. There is a huge negative ROI and the correspondingly negative P&L. And for profits, same thing, big P&L and big ROE. So that's how it works with the numbers that I have. I cannot imagine how I could make it any more accurate. Now let's go to the front. This one is pretty easy. It just tells you the number of trades overall. 370, that's real trades. If I were to go all, we have 695. You are familiar with that number. Now, here I have the number of profitable trades, and here I have the number of losing trades. It is based on this flag right here. And based on these two numbers, I calculate the profit to loss ratio. So in my real trades, the ratio is 3.6 to 1. All right, if we were to look overall, it's 4.7 to 1. Emulator makes everything better. Now, the next section right here is the different averages. So this is the average P&L per trade. Let's go to the real ones only. So here it is basically 0. And of course it would be because of 370 trades, we have a number approaching 0. That would make sense. Now, if you were only to take the profits, you'd get that the ROE, this is actually the terminal ROE by the way, it would be 0.24. So the average profit, the average ROE, the average ROE for all profitable trades is this, and for losing trades it's this, minus 0.83. And these are just the USDT numbers, but they're here more or less for information only because of the varying order sizes. It's not really a good indicator. Now right here I have something similar, but not exactly. And why is that? Well, here this takes the ROE terminal, which already takes into account the fees. But, well, first I have to explain why I want this. I wanted to know the average take and the average loss. Well, if the fees are included, this is not really the number to look for or to look at. What I want to know is the price change at which either the take profit or the stop loss was triggered. So in here, I'm taking, well, look at that formula. I am taking the price delta number here. So for all the profitable trades, the average price delta, or I would equate it to the average take, is 0.28, which is slightly bigger than the take profit that I set, which is 0.25 in my algorithms. Now here is the average stop loss, and here the difference is more significant. My stop loss, as you may remember, is 0.5, but here the average stop is 0.77. If we were to look here only at losses, yeah, it's the average of this. And why is that? Well, look here. For example, this one trade, the price delta was more than 3%. And so I got squeezed in the negative direction, in the direction of a loss, and my stop loss was not good enough to stop this price drop. I guess it was a very rapid price drop. Yeah, and if we sort, the largest loss was minus 4.683, which in theory should be impossible. Look at this. This coin is at 25 leverage, and the most you could lose here should be 4%, because only 4% is your own margin that is built into this trade. But here, what happened? I don't know, I lost more than was in my trade, more than my actual margin. And we can verify it here. I renamed this ROE margin. So I've lost 117% of my margin. Imagine that. And here is another one, even bigger. I've lost 135% of my margin. But I don't know how that is possible. But it did happen. So for a 50 leverage coin, the maximum loss should be 2%, and the exchange liquidates your position automatically if your loss is greater than 100 divided by leverage. So in this case it should be 2%, but it was 2.7%. Here it was supposed to be 4%, it's minus 4.7. That seems unfair, but that's the reality. If we were to flip this around and try and look at the greatest takes, let's see what that shows us. Here, the greatest take, the greatest price delta was 1.5%. That's not nearly as huge as 4%, but I'll take it, pun intended. Alright, let's go back to losses, and I will explain the last part on top, which is this, price delta median. We already have an average here, but why would I need a median, and what is a median anyway? Well, a median is an indicator that simply tells you that of all the selected numbers, half of them are above minus 0.63 and half of them are below that number. Why would I want to use that instead of the average or in conjunction with the average? Well, if you have these sort of outliers, or these -4, -3, -2, and then the rest of them are more or less in the center, following more or less a normal distribution, then these huge outliers could really skew your average. If, let's say, I was trading some 10 leveraged coin and I lost 10% here, it would affect my average pretty dramatically, especially if the number of trades was not that big. But it would barely affect the median. So what am I trying to say here? The thing that caught my eye most of all in this top part is that the losses are quite bigger than my stop loss in the algorithm. My stop loss is, as you remember, at 0.5. However, I am in reality losing much more. So this is including the fees, this is without the fees, but on the average basis, and this is on the median basis. So half of the losses were greater than that and half of the losses were smaller than that. And that made me think, you see, if we go for profit, it's pretty much what you would expect with a take of 0.25. Here I have 0.24, 0.28. Here I have 0.21. It's very close, but for losses, it's very different. So my thinking is as follows. If I'm losing this number or this number or this number anyway, why don't I make my stop loss bigger? Let's say somewhere in between these, like 0.7, and see what happens. That may sound crazy, and it makes me tremble a little bit for my hard-earned cash, but I will try doing that. I'll set my stop loss somewhere around this number. Why would that be beneficial? Well, actually, I'm losing this number anyway, but with a bigger stop loss, the chance of the trade being profitable increases a little bit, at least in theory, because stop loss is a sort of a wiggle room for the price to bounce back up if we're on the buy side, or to jump down if we're on the sell side, and all the stops that are within my limits, such as right here. See, everything that stopped at below the average stop or the median stop, this could have potentially, under some scenarios, been profitable. So what I'm trying to do is reduce the number of losing trades and increase this profit to loss ratio. So right here I'm at 3.6. Maybe that will make me have fewer losses. Maybe not. Maybe the whole thing, if I move it to 0.7, it would all increase and I'll have the same number of losses and each of them will be even bigger. But it is worth a try. So that's the crazy thing I'm planning to do based on this analysis. There's so much more stuff going on here, but I want to keep it focused, and as you remember, I try to change one thing at a time to see how exactly that affects my trading. So yeah, I'll leave the distance as is, and I will go and change my stop loss to 0.7 on all of them. Let's go do that right now, actually. So here are my algorithms, and the thing to do is to change this. Alright, that's changed. You can see that my order size is increased to 60. I thought, why not? It's more fun to see in the reports 15 cents instead of 7 on a take. If we lose, we're not losing too much. Let's start. Let's see what orders we have. Yeah, they are running. And here is the stop loss at 0.7. Now, what about those emulation algorithms? The ones that are clones of my true algorithms, I don't think I would need them anymore. What I'm more interested in is the ones that go beyond 0.5 on the BTC volatility. Let's go to the reports and I'll show you what I mean. So here under the letter B, I have those algorithms. And look at that. Here you can see that there have been 44 trades, 41 profits, and only 3 losses, with an astonishing ratio of profits to losses. ROE is pretty cool. The average stop is very surprising. I don't know how that happened. And the average take is huge. That I cannot explain. It looks like a gold mine, but actually we have discovered that the emulation is working significantly better than regular algorithms. And I think it's even more true for the high Bitcoin volatility ones. And why is that? Because when volatility is high, you are getting more and more trade latency, and these algorithms on emulation don't care so much about that. So I would reckon that these details, these numbers here, are even more skewed than with the lower volatility algorithms. But I'm gonna keep watching here. I'm gonna launch them anyway. And to make them more similar to these ones that I'm already running, I'll go for 0.7 here as well. Let's launch them. And here we go. So these will be running on low volatility, and it will switch over to emulation on high volatility. And this way I will actually be able to see, it will be sort of a flag or a signal for me that volatility was high at some point if I have trades on these two algorithms. Maybe there is some functionality in here built in that can notify me of that, but I haven't found it yet, and I'm running these anyway. So yeah, let's see what happens next. Now I'm running them with real money. Magic. Good luck. Good luck. I will report to you with the results of the trading, and I will try and find more insights here. I will see you next time for that.